A splendid evening it is to viewers. Welcome to Equity News on Equity Access, your cross-section of the stock markets and of developments in the Zimbabwean economy. A beautiful evening it is to you. Thank you for joining us live as we broadcast live from our Hampton Studios in Harare, Zimbabwe. I'm Ibn Mabunda. Let's get on to business. Well, today we start by having a look at what actually transpired during the course of the week. So let's get right onto it. On Monday, CABS loses value in assets to the tune of $19 million after a change in international financial reporting standards. Story being, in 2018, IFRS 9 was adopted as a replacement to IAS 39, bringing with it changes to classification and impairment of financial assets in that regard. In essence, IFRS 9 recognizes in anticipation as expected credit losses, while IAS 39 recognizes losses retrospectively after they have been incurred as losses. Meanwhile, in South Africa, a decision is made to increase fuel prices by 9%. What is the effect of that where Zimbabwe is concerned? When South Africa coughs, Zimbabwe sneezes. Why? Because South Africa is Zimbabwe's largest trading partner. On Tuesday, banks make moves to review their charges, with Standard Chartered Bank leading the pack. Of course, this is subject to approval as well as regulation by the Reserve Bank of Zimbabwe. Meanwhile, the Zimbabwe Energy Regulatory Authority issues a statement indicating a 3% increase in prices of fuel, with $3.20 for diesel as well as $3.40 for petrol. Moving on to Wednesday, AVM engages a partner, CityCard, for the major recapitalization exercise. Current output is 360 buses per year. They're looking to increase that to 600 buses and perhaps regain lost glory. Just to jog your memory, at its peak, AVM employed over 2,500. So now with this partner coming on board, they expect to employ 2,000 as well as ramp up production to 600 buses. On Thursday, Pro Plastics releases financials for the 2018 financial year with a new factory that is 97% complete, missing of course a deadline for completion as well as commissioning. Now we're talking about a different deadline, and perhaps we could expect that to actually come to fruition in terms of the commissioning by the second half of the year. Meanwhile, the corporation seeks to expand into DRC, Mozambique as well as Malawi. At the same time, at a continental platform, Gambia becomes the 22nd country on the continent to ratify the African Continental Free Trade Agreement. Positives are actually expected from that particular engagement. Moving on to today's news, Parliamentary Committee on Public Accounts today convened summoning ZINARA over its operations. Dissatisfaction expressed there by parliamentarians as they cite a lack of clarity as well as transparency in the manner in which business has been handled by the road agency. Chairperson of the Parliamentary Committee, Honorable Tendai Biti, threatened to terminate the contracts granted to local firm Univan by ZINARA over unclear tendering procedures for projects amounting to over $30 million. Univan, a software provider, is getting 22% of ZINARA's gross income under a deal which spans a very good 10 years. Former Minister of Finance Honorable Biti propped the management of Univan after a damning audit report which raised red flags regarding projects that are bleeding the parastatal dry. Our Equity Access team was in Parliament for the hearing. Let's have a listen.
You can't own Zimbabwe. And you own Zimbabwe. And we as Parliament will be failing in our duty if we allow you to get away with it.
Fulfilling our contractual obligations to the letter. So whatever we are contracted to do, we do.
Yeah, well, my question is this: can you confirm that you have the following contracts with ZINARA? You've got the license fee contracts. You have got the tolling fee contracts. You have got the fuel
and transit fee
contract. You have got the road access contract, and you have got the radio contract.
Sir, we will provide you with all the documentation, but you will see all the contracts that we do.
Yes, you do. Okay.
No, sorry sir. We will provide you with all the contracts that you require that will confirm all the projects that we do.
Sure. Is your company the same one that also does numbers?
Yes, sir.
Honorable Chair.
So you've got number plates, you've got road licenses, you've got road access, you've got vehicle licenses, you've got toll gates, transit fees, fuel left. They are richer than the country.
And the overcharge. Exactly. These people actually own us as well.
News. Let's have a look at what has actually been transpiring at the tobacco auction floors. Well, this is the tobacco contract the tobacco contract sales side of things, and they've just started trading on the 29th of March. They were holding on to their products, looking to make an assessment of what it is that is actually transpiring at the auction floors. Opening with with an average price of $1.83 in US dollars, of course, then which then progresses to where it is today, which is just below $1.84 at the particular auction floors. While the contract farming side has generated a cumulative value in terms of sales of $3.6 million. We expect the situation to improve as the market makes sense of the direction of things in that regard. Moving on to the tobacco auction figures, which of course opened on the 20th of March. Their opening price there was $1.86, which then slammed to $1.46 the following day. And at this present moment, if you check how there has actually been performance over the week, on Monday starting at $1.68, which is the average price, as well as running up to Thursday, where there's been a figure of $1.69 on the particular Thursday. Cumulatively, 1.4 million kilograms have been auctioned to date. Of interest would be, of course, to the farmers, the fact that they're getting paid in RTGS dollars, and if at all one farmer is to get payment in terms of US dollars, they must make an application for it and must be able to show how much they actually need the foreign currency in that regard. So that's the story that is actually playing out at the auction floors. Please be advised that from today we will actually be giving you the figures as the tobacco auction floors progress. So we will actually be giving you information in that regard. We'll take just a brief break, and when we come back, we'll have a discussion on these and other issues. Please stay tuned. Welcome back, viewers. I'm now joined in studio by our very own investment analyst, Anesu Chumbumo. Anesu, good evening and welcome to the show.
Thank you, Eben. How are you doing today?
As usual, can't complain. Should only get better yourself.
I'm very good. Thank you.
Beautiful. Let's get the ball rolling. Parliamentary Committee on Public Accounts today summoning ZINARA and expressing dissatisfaction on how things have actually been handled by the road agency. What is your assessment of that situation there?
Well, the history of the story pretty much starts back in 2016 when Univen was given the contract as to provide ZINARA with stationery. That cost almost over $3 million. for that particular contract.
Stationary.
In stationary only. Now, fast forward, they then got other contracts to deal with ZINARA in terms of getting a vehicle licensing software that which actually gets them to a place where they can earn about 18% on the vehicle licensing gross income. Then we also talk about 22 toll gates being provided with the hardware that that these toll gates do need, and that particular deal also attracts a certain percentage on the gross income. Now, so on an average, these guys are pretty much getting about 11%. It should be 11% if I'm not mistaken, on an average, for all the gross income that they have, for the gross income they get, that ZINARA makes, in particular mention to the contracts that they have signed up together. Now, the issue now with the parliamentary committee now is that this deal was never put on a tender, wasn't offered on a tender basis. Apparently, Mr. Ndlukula, who is from the OPC, wrote a letter to to the SPB acting officer at that time. The name kind of escapes me right now, but he wrote a letter asking for a blanket covering for Univen, for them to be able to deal with ZINARA without having gone through a tender application. So with that being said, that really raises a lot of bells. And with the money that Univen is making out of these deals,
30
it's
million.
ridiculous.
And this contract is supposed to span a period of over 10 years.
10 years,
But
yes.
how does that happen? What does this mean? I mean, this is unacceptable.
Very, very, very much unacceptable. And these are the things that we do not want to continue happening within the nation. As such things do keep us in a place where we are very weak as a nation economically. We also are in a place where corruption is very rife, and these kind of things can keep on going on if the government does not put a very tight clamp on most of these dealings. I think when they do have another hearing, I think it should be next Friday, they should come up with, they should say what is very, very clear in terms of how Univen has been dealing with ZINARA, and for us to pretty much get a very clear picture. Because besides them actually giving us a very clear picture and explanation of what has happened, the amounts of figures that these guys are earning from ZINARA are too ridiculous for the jobs that they've done. I think even with the contract having to span over to 10 years, it's too much.
That's a long time.
Yeah, it's too long, and that eats into most of the budgets that these guys have, keeps the company down. And I mean, ZINARA should be looking towards using such kind of figures to refurbish the road networks that we have. A lot of road networks are in bad shape. They need to be reconstructed. They need to be repaired. You name it. But and with having such road constructions in bad shape, that puts a lot of impediments on a lot of businesses. Some businesses may not find it very convenient for them to go to certain areas of the country because of how our road networks are set up currently. Yes, there has been some improvement as of late, but then with such figures that we've heard being earned by Univen, we could have been a couple of more light years ahead of what we are actually doing on the ground.
I realize. Perhaps moving on to our next story, tobacco, how things have been playing out. What can we expect in terms of the tonnage as well as the pricing? I mean, we're currently sailing at a price of about $1, just below $1.80. The specific figure, of course, there would be quite interesting. But I'm saying, what can we expect in terms of the pricing as well as in terms of the tonnage?
Well, we're 2 weeks in right now, and currently we are actually 89% below last year's level of production. Now, yes, we did expect a reduced level of production this year, pretty much owing to how they had factored in issues to do with the drought coming in on the nation, and how the quality and the amount of leaf that was going to be produced was going to come in. So the expectation of a lower tonnage was there, but then 89% is too much for my liking, and I think it is also not something that they expected very much. Now, one of the issues that I think has been a cause, it may be that the trading season is a little bit, we're still too early into the season for us to talk about us having a wide gap, but a lot of farmers seem to be holding on to their tobacco leaves right now because they want to wait out for a better price. Trading at $1.69, it may be fair at the moment, but as we go on, it should come up. I remember last year it started trading around about $2.40, $2.50, thereabout, and even more. So some farmers are holding out to find out where the price is going to go.
So
on.
perhaps there's
Yes.
that tendency to want to come in when perhaps the
When the
price
price
is
is a
actually
little
reached the $2.50,
Yes.
if at all, this year.
Yes, but then there also is a factor that they are actually selling they're actually being charged in US dollar, but then they also are not getting the amounts that are due to them in US dollar, or the 50% the government actually promised them. Now, the 50% the government promised them is only being issued by the central bank after they show the need of foreign currency. Yes, and that means when they do sell their bales, they're getting 100% RTGS dollars, and then after they show the needing foreign currency, then they apply for that for that 50% at the rate of at the interbank rate that was on the day that they sold, rather than being given the US dollars at the rate they would on the particular day they would have applied. So that dynamic there has pretty much discouraged a lot of farmers, because they're not finding much benefit out of it. There also is an issue to do with how last year had a very high outturn, because of a lot of farmers who were looking towards that US dollar, and then also the 10% incentive in terms of export, which did come in bond notes, but that incentive that was there was also pretty much a very, very good encouragement for a lot of farmers to make sure that their yields are high, and they have good quality leaves for them to sell, and then get a good amount of money out of the 10% incentive that they were getting at that time. So that factor could have a play in terms of the base where we are actually coming on from last year. But then that factor shouldn't be too much. I mean, the play around the disgruntlement that they have between them and the central bank as to their payments, I think, is a major factor around how they're behaving currently. It may turn out to be a little bit better going into the future as reality really sets in, and they find themselves in a place where they have not much option as to where to sell their leaves to. But then the production numbers, they are still expected to be lower than what happened in the previous year. Well, contract farmers, yes, they only then started trading last week Friday, so that means they only have been trading for the past 5 trading sessions up to Thursday. By the way, these are figures that only trade up to the previous day. We can never really report on the particular day we'll be talking about it. So they did start last week Friday. I think there also was an issue to do with them actually waiting out to see what the sentiment of the government was, if they were going to waver in the decision that they had made as to the payments that they're supposed to be given.
I realize. Well, Agnes, we're just going to take a break. When we come back, you're going to take us through the stock markets. Please stay tuned.
How many seconds do you have? Actually, 10 lose rows. Let's try that one.
20 seconds.
No, you don't need to play anything.
Welcome back, viewers. I'm still with Aniso. Aniso, please take us through the stock markets there.
Well, today was a pretty good day. Recovered from a two-day run in losses. The all-share index added about 1.35% for it to settle at 123.16 points, while the industrials added 1.36% to settle at 410.71 points. The top 10 index shows the evidence of it being the pulling power there in terms of the stock market coming back up. Econet, Cassava, Insco, Old Mutual and Padenga were the rises of the day in that top 10 index there, making that 5 out of 5. The other 5 are actually sailing very much stable. Old Mutual is now back in the green on a year-to-date basis, just having added about 0.01 cent to their stock price. Now, just having a look at the 5-day trend, this jump today pretty much brings back 3 of the 4 indices back in the green on a 5-day trend, with the top 10 index having come up to 0.22% versus last week, Friday. We also have a look at how the all-share index did come up to about 0.43%, adding to their prior, pretty much bringing them back from the losses. Now, the minings index is still on the down low, as it did come off in the past in the last session, and then today it did sail stable. Now, for our risers and fallers, we had 10 bulls today versus 2 bears, and about 19 counters that were trading that exchanged their hands, which pretty much leaves out 7 counters that sailed stable in the trading session today, with African Sun being the leader of the bulls, coming up 6.67% for it to settle at 16 cents, while Cassava settled at 106.41 cents after having added 6.39%. TSL added 2.08%, while Simbisa and NMB curved the top 5 rises set by coming up 1.75% and 1.25% for both of these stocks to settle at 66.14 cents and 20.25 cents in that respective order. Now, the worst performing counter was a banking stock, which was First Capital Bank, formerly known as Barclays, did settle 0.6% lower than its prior trading price, which puts it at 5.01 cents, while Exia, which is pretty much almost in a similar relationship with Simbisa in terms of Insco being a parent there, did lit up about 0.17% for it to settle at 34.99 cents. And then just quickly go over our forex market today. The Old Mutual implied rate did weaken today, pretty much consequent to the JSC counter having come off today, while the ZEC counter added 0.001% to its stock value, while the interbank rate has further weakened today with a pretty much larger jump coming from 3.06 to 3.09, which should spell out a 3.1 by Monday if anything does not change with regards to how the market has been reacting. The payroll market has pretty much worsened, coming up to 4.25 from 4.18, with a lot of traders trading around about 4.5, 4.4, while the cash rate is down at around about 4. So the average then does come to about 4.25. That's pretty much it for me on the stock market and the forex market.
Thank you, Anesu. Thank you, viewers, for watching. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website www.equityaccess.net. Thank you and great evening.